Welcome back to Investing Talk Podcast. Today, we're digging into the sources you shared with us. We're tackling a question that seems to be on a lot of investors' minds right now. Is Hut 8 Core a good time to buy? We've got quite a stack of research here, and I'll say up front, the sentiment surrounding this company, well, it's looking overwhelmingly positive based on this material. But before we dive into the nitty-gritty, just a quick reminder, please hit subscribe, like the episode, and leave a comment if you're finding this analysis helpful. Oh, and definitely let us know in the comments if there's a specific company you want us to look into next time.
Yeah, absolutely. Hut 8 is it's really carving out a unique space. It's not just a Bitcoin miner anymore. It's fundamentally becoming this integrated energy and compute infrastructure company. So our goal today isn't just to rattle off strong numbers. We want to distill the why behind it all. You know, why does this model work? How do the technical facts, the operational details from these sources actually support the market momentum we're seeing?
Okay, that sounds good. Let's start with the foundation, maybe the long-term advantage. We hear this term moat thrown around a lot. If Hut 8 has one, what's it actually built on?
It's built on control, plain and simple, controlling cost, capacity, and infrastructure. What really seems to set Hut 8 apart, based on this info, is its vertical integration specifically in energy management. I mean, they manage a total energy capacity of 1,020 megawatts. That's huge.
Look, 1,020 megawatts.
Yeah.
For someone maybe trying to wrap their head around that number, why does managing that much power matter more than, say, just holding a lot of Bitcoin?
Because it flips market volatility on its head, essentially turning it into potential stability. When you control the power source, you can lock in low costs for your own mining. That's the obvious part. But crucially, when the grid needs power during peak demand, they can actually scale back their mining operations and sell that power back, usually at fixed, stable contract prices. So it transforms what might look like just a crypto play, heavily reliant on Bitcoin price, into something more like an energy infrastructure play, but, you know, with this high-growth crypto element layered on top.
Right, so the core business has some insulation from those wild Bitcoin price swings that can really crush miners who only mine. That makes sense. That's the strategy. So how did that strategy translate into growth? Let's look at fiscal year 2024. The sources mentioned some pretty explosive figures there.
Historic is probably the right word.
Right.
Yeah. FY 2024 revenue hit $162.39 million. That's a solid, 69.07% increase from 2023. Very strong. But the real story, the one that highlights that efficiency driven by the infrastructure moat we just talked about, is the net income.
Okay.
FY 2024 net income just soared. $331.88 million. That's an increase of, get this, 1,418.91% compared to the previous year.
Wow. 1,400%. That's definitely not a typo. How did they pull that off? Was it just Bitcoin going up, or was it that operational control?
It seems overwhelmingly driven by operational efficiency, flowing directly from that infrastructure segment. They really leveraged their own compute sites, those favorable energy deals they struck. The sources suggest that by optimizing how they used energy, securing those fixed-rate contracts, they just dramatically cut the cost to mine each Bitcoin, which naturally led to massive margin expansion.
Right.
It kind of proves the value of being an energy company first and maybe a miner second.
And that successful model, it looks like it carried right through into the second quarter of 2025. That seemed like a big turning point based on the research.
Yeah.
What did that Q2 release in August tell us?
Yeah, Q2 was the anchor event recently. Revenue was $41.3 million. Fine. But the profitability number, the one to really focus on, I think, is the adjusted EBITDA. It came in at $221.2 million.
Okay, adjusted EBITDA. For anyone listening who might not track that metric closely, can you give a quick definition? Why is that the key figure here?
Sure. Adjusted EBITDA, it's earnings before interest, taxes, depreciation, and amortization. But it's adjusted to strip out one-time or non-cash things, like maybe stock compensation or big write-offs. In fast-growing sectors like this, it often gives you a cleaner look at the core operating profit. It removes some of the noise.
Got it.
So seeing $221.2 million in that cleaner operational profit metric, it just confirms that huge margin expansion story we were discussing.
And that strong Q2 didn't happen in a vacuum, right? The sources mentioned some strategic financial moves back in July that kind of signaled confidence from management.
That's right. They boosted their financial flexibility. They expanded their Bitcoin-backed credit line with Coinbase, actually doubled it. Went from $65 million up to $130 million.
Good.
That shows you that the capital markets, specifically big players like Coinbase, they feel pretty comfortable with the value of Hut 8's assets and their business model. It feels like smart flexibility, not like they're desperate for cash.
And the huge Bitcoin reserve they hold over 10,600 BTC that acts as a big buffer too, right? Puts them ahead of miners who might have had to sell off coins to fund things.
Absolutely. And then moving to the operational side, September was key because it sort of formalized their big push for scale. The sources mentioned the merger closing soon with American Bitcoin Core and Griffin Digital Mining. These moves are all about accelerating that vertical integration and really cementing that huge 1,020 milliW energy base. It's all about scale.
Okay, so the strategy's working, the financials look strong. That should mean their core engine, the mining part, is humming. What's the data say about their actual mining power, their hash rate?
It says they're capitalizing on that infrastructure very quickly. Their deployed hash rate hit 9.3 exahashes per second, EHs, as of the March 2025 update mentioned in the sources. And just for context, 9.3 EHs isn't just about mining more Bitcoin. It puts them firmly among the top, maybe 3 global miners by capacity. That makes them a pretty premium, scalable asset in the space.
And the growth rate of that hash rate, that number really jumped out at me from the materials.
Staggering, yeah. That 9.3 EHS figure represented a 102% jump from just the month before.
Doubled in a month.
Essentially, yes. They doubled their operational capacity incredibly quickly. It shows they can leverage that energy infrastructure they own to scale up way faster than companies waiting on third-party power deals. That rapid capacity boost is the big engine for future earnings that the market seems to be pricing in right now.
And that operational muscle feeds into the diversification you mentioned earlier. They aren't just tied to one commodity, which seems pretty rare here.
Correct. Those 4 segments, power, digital infrastructure, compute, and other, they give them multiple revenue streams. That diversification acts like a crucial safety net, you know. It buffers them against Bitcoin swings better than many competitors who are just pure mining plays.
Okay, we've laid out a really strong case based on fundamentals and growth. But, sometimes the market gets ahead of itself. Let's shift to the stock price itself. What are the technicals telling us? Is this surge sustainable, or is it looking stretched?
Well, the chart seems to back up the fundamental story pretty well. The stock's showing a very healthy confirmed uptrend. Ever since that big breakout back in April 2025, it's consistently set higher lows and higher highs. That's basically the textbook definition of sustained momentum, often driven by institutions.
So where are the key levels that someone watching the stock should be aware of right now, psychologically or technically?
Recently, the price has found solid support in the $25 to $30 range. That seems pretty firm now. Resistance has been clustering around the $42 mark, and right now, as we speak, it's bumping up against its 52-week high, which is $42.39. So a clear, decisive move above, say, $42.50, especially on strong volume, that would typically signal the rally is likely to continue.
Okay, let's check the pulse of that rally. Is it moving too far, too fast? Any warning signs?
The indicators suggest it's healthy momentum, not really a manic bubble sort of situation. The price is comfortably above both the 50-day moving average, which is around $27.56, and the 200-day, way down at $20.21. Plus, the RSI, the Relative Strength Index over 14 days, is sitting around 54.6. That's bullish, yes, but importantly, it's not in overbought territory.
Right.
That implies there's likely still room for the price to run higher before you'd expect a sharp pullback just based on technicals alone.
Interesting point here in the sources. The analyst consensus is apparently strong buy, but the average price target 12 months out is only $31.21. That looks really conservative compared to the current price near $42. What's that gap telling us?
Yeah, that's a great observation. It looks like a classic case of Wall Street analysts maybe playing a bit of catch-up. Analysts often move slower, right? They tend to base target heavily on the last set of published financials. The stock's rapid rise suggests investors, both institutional and retail, have already factored in the potential impact of that huge hash rate doubling and the efficiencies we talked about. So that $31 target doesn't necessarily mean the smart money thinks it's peaked. It probably just means the analysts haven't fully baked the future potential into their models yet. And the sources do note that institutional buying remains strong, which supports the current higher price.
This is where timing becomes really key for someone listening and trying to decide when to potentially act. We know the why behind the momentum, but what are the specific concrete catalysts coming up in the next, say, 3 months?
Okay, the big one on the calendar is definitely the Q3 earnings report. The main release and the call are set for October 31st, with the official filing verification around November 12th, 2025. The general expectation, the street consensus, is already looking for strong year-over-year growth, But the real focus, I think, will be on the operational details within that report.
And November looks like it'll be pretty busy beyond just that earnings.
Absolutely. You'll want to watch for the institutional investor filings, the 13Fs, usually dropping around November 15th. That'll show us how much the big funds added to their positions during this recent price run-up. And then there's the Black Friday ETF rebalancing watch around November 25th. If HUT8 gets a bigger weighting in key crypto or tech ETFs, that could drive significant buying.
But the most crucial insight, connecting back to that massive 102% operational jump, it's about what that November earnings report is really expected to show for the first time, right?
Exactly. That huge doubling of hash rate capacity we keep mentioning, it's not yet fully baked into the official financials through Q2. So this upcoming November report is expected to be the first time the company really quantifies the full financial impact of running at that much larger scale.
Right.
If they can show they maintained those low-cost efficiencies while operating at double the capacity, well, that's the kind of news that could easily provide the fuel for a technical breakout above that $42 resistance. That's probably the biggest near-term potential trigger.
Okay, makes sense. Now, before we wrap up with a final thought, we have to talk about the other side. Balance is key. With all this optimism, what are the main risks highlighted in the sources?
The number one risk, and it's unavoidable in this sector, is just direct exposure to Bitcoin's price, commodity price risk. If Bitcoin takes a sharp, sustained dive, HUT8's valuation is going to feel it. However, as we've discussed, they do seem to mitigate this better than many peers through those fixed contracts in their energy business and the diversified segments. It provides a cushion.
And what about the regulatory risk? That always seems to hang over crypto mining.
It's definitely still a factor. The potential for new regulations impacting Bitcoin mining is always out there. But again, looking at the sources, HUT8's management seems to have a track record of staying compliant. And crucially, that diversification into energy and compute means they aren't solely dependent on mining revenue. That gives them more strategic options if the regulatory environment changes compared to a pure play miner.
So bringing it all together, the strategic moat from the 1,020 milliW energy capacity, that incredible 1,400% plus net income jump, the healthy technicals, the upcoming earnings catalyst, potentially showing the scale impact. The overall picture from these sources still looks decisively bullish.
It does. The core thesis seems solid. HUT8 looks positioned as a leader, riding waves from both Bitcoin adoption and its underlying energy and infrastructure business. You know, what's really fascinating, stepping back a bit, is how those energy and compute capabilities make HUT8 fundamentally more than just a mining stock. Sure, there are rumors about M&A or maybe getting into AI compute partnerships. That's speculative for now. But the framework they already have, owning the power, owning the large-scale data center space, it positions them perfectly to potentially capitalize on these huge macro trends in digital infrastructure. They could maybe expand into things like AI compute demand long-term. That's something far beyond just mining Bitcoin. That potential to pivot, to leverage those core assets in new ways, that's where the real durable long-term value might lie.
That's a really powerful final thought. Gives you something more to watch, even beyond the next earnings report. Well, thank you for sharing all these sources with us for this analysis. We really hope this breakdown helps you, the listener, navigate the market and get the full picture behind HUT8 Corp.